Hello everybody, this is Matador from freetradingvideos.com. It is Thursday, March 19th, 2009, and I am sitting here with D7. He wants to say hello.
Hello everybody. Good to see you guys after the market today.
And getting some business done, pretty great. Just wanted to take a run around the markets with you. So Wall Street turned a little bit lower after this unemployment report. You can see that I'm just looking at Yahoo Finance, a nice place to go for free news. And so you can see here that the jobless claims report came out at 646,000. That was less than what they were expecting it to be, but it was still very high. And in fact, it was setting a record for the 8th straight week. And that kind of put a dent in the nice run-up we've had. Technically, the nice run-up we have has also been stinted by the declining 50 MA on the daily chart. I'll just go back out here to the S&P 500 tracking index, the ETF. We mentioned yesterday that this gap back here, you can see it, also again coincided with this falling 50 MA on a daily chart. Nothing to sneeze at. And if I click intraday and look deeper, pull up a 30-day 30-minute chart, or even a 30-day 15-minute chart, it's the same picture again, just a little bit more scrunched up, right? I can zoom in now, and you know that this gap back here is going to be something to contend with, and that also is the 50 MA area on the daily chart, like I just mentioned. So left-click and hold, drag over to the right. You can zoom in into this area, and you can see that this run-up, the $78 mark that I've been talking about over the last couple of days, we got to pause. Another one, and then we broke it, tested it a little bit, right back up into this area. And actually maybe a 30-minute chart would be easier to see. I'll zoom back in here. Here we go. So this resistance area around 78.50 now also comes into play. So a test of this 78, a test of the 78.50 again and again and again. Nice breakout toward the end of the day yesterday to a nice run-up. That was very, very good breakout candidate, and it started to fill this gap a little bit. Double click to get back in this area. Right, we still have more to contend with, along with, like I said, the 50 MA on a daily chart. So zooming back in, we're now selling off a little bit after this beautiful run up and the jobs number that we just talked about. So technically, the markets are acting very, very nicely, and I wouldn't have expected much more from the market, at least in the near term. If I take a look around the trends, which is always a good thing to do, I'm just going to look now at a 2-day 5-minute bar. That's fine. You can see that they spent part of the morning below 1.0, but then very quickly zoomed back up into 1.4. Now we're at 1.24 area, at least for the trend on the New York Stock Exchange. The NASDAQ trend did the same thing, but has spent a good part of the day below 1. So a little bit more strength, more volume flowing into stocks on the increase than on the down. So that's showing some positivity. However, the VIX, and I warned about this yesterday, was rising a little bit. The sell-off in the VIX coincided nicely with that breakout to the upside yesterday, and now we're starting to climb higher in the VIX, and that confirms the sell-off that we're having this morning. So again, I'd be careful how I went long in here. I would rather look at stocks that were experiencing relative strength and get into those on the long side, and also look at stocks that are exhibiting relative weakness compared to the broad market picture and get into those on the short side of the market. And we'll see what we get. If we get a full retracement of this run-up after the breakout of 78.50 area, then that would be X% more bullish or bearish than we would have gotten if it had held up nicer. There's also a nice trend line we can draw from the breakout, connecting these swing lows and these swing highs in here. We have a sort of a wedge formation, and we have failed that wedge to the downside. So that's X% more bearish than bullish in this scenario, so I'm going to be needing some convincing before I go long in the stock market anytime soon here, at least intraday. So I hope that helps with a little bit of a run around the market. Thanks for your comments yesterday. Very, very encouraging. And stay tuned, like I said, for D7's video and anybody else who might post a video later on in the evening. Talk to you soon.